Welcome to Capital and Crypto. We talk about money, tech, and financial freedom every week. If you are a total beginner in finance or crypto, this video is for you. We'll go through 50 key concepts in less than 10 minutes. Let's go. Part 1. General concepts. Number 1. Cryptocurrency. A digital or virtual asset secured by cryptography, often decentralized and based on blockchain technology. Number 2. Blockchain. A distributed ledger that records all transactions across a network of computers, is immutable and transparent. Number 3. Decentralization. The transfer of control from a central authority to a distributed network. Number 4. Fiat currency. Traditional government-issued currency like USD, euros, not backed by a physical commodity like gold. Number 5. Token. A digital unit of value issued on a blockchain, which can represent assets, utility, or currency. Number 6. Altcoin. Any cryptocurrency that is not Bitcoin. Number 7. Stablecoin. A cryptocurrency pegged to a stable asset like USD to reduce price volatility, such as USDT, USDC. 8. Wallet. A software or hardware application used to store and manage cryptocurrency keys. Number 9. Public keys. A cryptographic code that allows users to receive cryptocurrencies. 10. Private keys. A secure code that allows users to access and manage their cryptocurrency holdings. Part 2. Blockchain technology. 11. Smart contract. Self-executing code stored on a blockchain that automatically enforces rules and agreements. Number 12. Consensus mechanism. Method by which blockchain nodes agree on a single source of truth, such as proof of work, proof of stake. Number 13. Node. Any computer connected to a blockchain network that helps validate transactions. Number 14. Hash. A cryptographic function that converts data into a fixed-length string. Is used in security and data integrity. 15. Mining. The process of validating blockchain transactions and creating new coins, many in proof-of-work systems. 16. Fork. A change in the blockchain protocol, which can be hard incompatible or soft compatible. 17. Gas fee. Transaction fee required to perform operations on networks like Ethereum. 18. Block. A unit of data that stores transactions on a blockchain. 19. Genesis block. The first block in a blockchain. 20. Ledger. A record of transactions maintained across the blockchain network. Part 3. Types of cryptocurrencies. 21. Bitcoin, BTC. First and most well-known cryptocurrency, launched in 2009 by Satoshi Nakamoto. 22. Ethereum, ETH. A decentralized platform for smart contracts and apps. Number 23. Ripple, XRP, a crypto token used for fast and inexpensive cross-border payments. 24. Litecoin, LTC, a peer-to-peer cryptocurrency similar to Bitcoin but with faster transaction times. 25. Cardano, ADA, blockchain platform focused on sustainability and academic research. Part 4. Trading and investment. 26. Exchange, a platform where cryptocurrencies can be bought, sold, or traded, such as Binance, Coinbase. 27. Liquidity, the ease with which an asset can be converted into cash or another asset. 28. Volatility, the degree of variation in crypto prices over time, often high in this market. Number 29. Hold, slang for hold on for dear life, a strategy to hold rather than sell crypto. 30. Pump and dump, a scheme to artificially inflate a coin's price before selling off at a profit. 31. Whale, an investor who holds a large amount of cryptocurrency and can influence the market. 32. Market cap, total value of a cryptocurrency, is the price times circulating supply. 33. ATH, all-time high, the highest price ever reached by a cryptocurrency. 34. Bear market, a market trend characterized by falling prices. 35. Bull market, a market trend characterized by rising prices. Part 5. Decentralized finance, DeFi. 36. Decentralized finance, financial services using blockchain technology without traditional intermediaries. 37. Yield farming, earning interest or rewards by lending crypto or providing liquidity. 38. Liquidity pool, a collection of funds locked in a smart contract used to facilitate trading. 39. Staking, locking up crypto in a wallet to support a blockchain network and earn rewards. 40. Decentralized autonomous organization, a blockchain-based organization governed by smart contracts and community voting. Part 6. Security and privacy. 41. Cold wallet, offline storage of cryptocurrency usually considered more secure, for example hardware wallet. 42. Hot wallet, online connected wallet, more convenient but potentially more vulnerable. 43. 2FA, two-factor authentication, extra security layer requiring two forms of verification. 44. Rug pull, a scam where developers abandon a project and run off with investors' funds. 45. Phishing, fraudulent attempt to gain access to sensitive information like private keys. Part 7. Emerging trends. 46. NFT, non-fungible token, unique digital asset that represents ownership of a specific item or piece of content. 47. Web3, a vision of the internet powered by decentralized technologies like blockchain. 48. Metaverse, a virtual world often powered by blockchain where digital assets and crypto play key roles. 49. Layer 1, the base blockchain architecture, for example Ethereum, Bitcoin. 50. Layer 2, secondary frameworks built on top of Layer 1 to improve scalability and speed, for example Polygon, Lightning Network. If you learned something today, smash that like button, subscribe to our channel, and hit the bell for weekly financial wisdom.